Hello, and welcome to the market update for Tuesday, October the 5th. The market's kind of rebounded from the decline yesterday, but what I'm concerned about is what I was concerned about on Friday, which is that we had that kind of bullish reversal, but it really wasn't a very strong bullish reversal, and it wasn't shocking that we declined yesterday. As I'm going to show you here, the problem keeps coming back to the sentiment levels. There's too many traders out there that aren't afraid of this pullback, and in fact are just completely viewing it as a buying opportunity, buying the dip. And buying the dip works until it doesn't, and when it doesn't, it usually ends pretty bad. Meaning you get a relentless decline where it really wipes out a lot of people, and almost all the gains that people make on buying the dip on the way up lose it all if they don't recognize that topping behavior when that massive decline ends up happening. So we're always worried about that massive decline. Now, a couple things that I can point out. One of the things that when we get to the charts, I'll show you this, but it's something I talked a lot about in the summer, which was that we were reaching these new all-time highs, but we weren't getting into that extreme area, and so that usually marks a major top. And so, if you ask me, are we going to rebound from this dip? It's definitely possible that we do that. And can get to that level, and that would probably drive us to that level where we get those extreme conditions, because again, with the sentiment already high, the general trading crowd will get the feeling that there's no way this market's going to drop, and that's when they kind of go all in. They're not afraid of anything, and then that's when things reverse and the panic selling starts to happen. So but in the near term, the problem that I see is that we could also have what happened on Friday take place, where it looks like we're rebounding like today, and then we still have a little bit further to drop. Now let's take a look at the directional alerts, and we'll get to the charts. I can kind of show you a little bit more of what I'm talking about here in the intro. Momentum. Now, from a momentum and a breadth standpoint, we're definitely in that kind of oversold condition. So we've got the market pullback, and momentum is down here on the left side in the extreme range, meaning that we're in that kind of oversold condition. Breadth is not in the extreme condition, but it is in the high area right here. But again, what keeps worrying me is the sentiment. We're still in the high range on sentiment, which means that there's just no fear behind the selling. And again, the reason why that's important is because usually you got to have some fear in the selling to know that you're at a bottom or near a bottom. And so it's hard to tell if the bottom is in yet. We started to see the VIX spike a little bit last week on some of the selling, but yesterday, with the bigger selling we took place after Friday's attempted rally, the VIX didn't move up much at all. So so the bottom line is that the market could go either way right here. It's hard. I've been looking at the charts all morning, and I keep coming to the same conclusion. We're either going to get a reversal of this rally and kind of flush out, get a little bit of fear in the market, or it's going to rebound, but it's going to be a sluggish rebound, because usually what drives sharp buying that causes the market to go up quickly is coming out of that fearful sell-off. And so if you don't get that, then it tends to be kind of sluggish buying. So the market can creep up, but it looks a little bit more sluggish or choppy. But again, I would have expected if there was a little bit more fear in the selling, I would have expected the sentiment indicator to be at least over here in the high range or on the left side of that trending box at least. But the fact that we're still remaining very high right here is kind of troubling me a little bit. And it's causing me to be more inclined to kind of sit on the sidelines as well as far as the portfolio is concerned. We might add something here or there, but definitely not an area to start being overly aggressive. And when I'm looking at individual charts, as I'll get into the individual stocks here in a little bit too, that there haven't been a lot that I've liked to even be able to add to the watch list. The indexes here are, let me go back to the buy-sell ratios. Buy-sell ratios aren't showing an extreme yet on the sell side here. I mean, we have a little bit of a wide move here between the buys and the sells, but not yet at an extreme level. And we're still below, on the overall market buy-sell ratios, we're still below 1. We're at 0.5. So that's definitely a sign that we don't want to be adding too much to the portfolio in those conditions. Sentiment indicator here is again, it's oversold. It's down near the bottom here. I mean, there's definitely room for if the market does decide to rally, there's definitely room for it to rally. I mean, as far as coming out of a little bit of an oversold condition. But I just wonder how long that will last and how strong it will. Will it be a broad-based rally, or are we going to see, very few stocks participating in it? So it has the illusion that the market is rebounding, but there's only a couple of stocks that are causing it to rally. So that's something we'll also be looking at, as well as the breadth. If there is a rally from here, what does the breadth look like? The indexes here, you can see they're all the buy-sell ratios are all under 1, except for the small cap 600 here. But even then, I mean, most of them are below 1. And so let's get into the individual charts. The S&P 500 here, the SPY. So we see that Friday we attempted to rally off of that Thursday sell-off. But you can note what made Friday's rally kind of weak was mostly how it faded going into the close. And that's something I'll be looking for today as well. Right now, we're right at the highs of the day, but do we fade into the close? And especially if we fade below yesterday's open right here, if we get back into this, fade into that range right there, that'll concern me a little bit that it's a little bit of a false rally. And again, it'll show up if you're just looking at the indexes themselves. It'll show that we're up today. I can't see the indexes going negative, but if we fade in the close, the price action is going to be, that's going to show that the price action is weaker. And so all the headlines will be, well, the market was up today, and all the nightly news reports will say, the market was up, Dow was up 400 points today, or 300 points, whatever it ends up being. It was a nice, strong day in the markets. But if you understand how to read that price action, it would be very weak. Now, if it holds where it's at right now, that could be a little bit different. But another thing, though, we got to look at is the volume. The volume already is going to be much lighter than it's been. It's not going to get anywhere near these levels at the end of the day. We only have 2 hours before the market closes. We're not even at half the volume that we've been at over the last few days. So this is going to be a very light volume rally within a downtrend. That's not a good. It's just not a good sign. But I mean, context-wise, and this is why I've been kind of going back and forth. This is a deeper pullback than we've had for a while. We had these little shallow pullbacks right through here. There's a little bit of a deeper one, but this one's been even deeper than that one. That one was back in earlier in the year, back in February and March. And that, again, that's the thing is, and it does look like a little bit of an ABC correction. The problem I have, though, is that usually you're going to see the higher fear levels near the bottom of an ABC, a larger ABC correction. We're just not seeing it. And you're not, and when you're at the bottom, when you're watching CNBC, there's people that are telling you, well, you might want to wait to buy, or you might want to be more defensive right now. There's no fear amongst the talking heads on CNBC or financial websites you might be looking at. Everyone's talking about buying the dip. Jim Cramer is talking about buying this dip. That's just not the feeling you have at a bottom, and so that concerns me. And again, it might just be that we're getting real close, and that we see the S&P does break out to new all-time high, but then we start to see all those indicators get into that extreme overbought condition. Tops and bottom. The tops are a little bit harder to time than bottoms, because bottoms usually form very quickly. Tops can kind of form over a longer period of time. But boy, I tell you, if we rally to those new highs and get into extreme conditions, I'm going to get really defensive, start getting out of almost everything, or looking for any clue of the start of a sell-off to get out of that portfolio and wait for a much bigger correction to take place, because that'll probably be happening soon at that point. All right. Hold on just a second here. All right, let's look at the Dow. Again, mostly, let's take the volume bars off. I mean, all these are going to look about the same. Nasdaq. The hardest part about doing the class today is and it doesn't happen very often. But like I said, I've been looking at charts all morning, and I could probably save you a lot of time if you have other things to do today, and just say the market could go either way. As what I see right now, it could go either way, and so I'm not going to be very helpful. If you want to trade right now, take out your shiny little quarter that you have in your pocket, flip it up in the air, and heads you buy and tails you sell. I mean, I can't tell which way we're headed. And now, normally, when I'm not trying to give advice to people and help them out, this is a period of time where I would get on a travel website and see if there's a place I want to go for a few days to get away from everything and go on a little bit of a vacation, because I really don't want to trade in this type of environment when I can't feel like I have an edge, or I feel like I'm guessing. So again, today's update may not be very long for that reason. And like I said, it doesn't happen very often, so that's a good thing. But I'm going to try not to stretch this out too long to where I keep repeating myself and take up a lot of time. Russell 2000, again, not really. In fact, this is really, you want to look at the Russell. It's really showing an indecision day right here. Spinning top type candlestick right there. It just not much help there. Now, as far as some of the other indexes, we can get a little bit, there is a little bit of a trend that we can talk about on some of the other indexes here. The TLT, this is the bonds. We're looking at bonds here. We talked about, I've talked about how the larger chart, this looks like the trend up, this looks like a correction. We did dip a little bit below the bottom of that. Could this be wave A, wave B, wave C? That's all definitely possible. In the very near term, though, this is still acting like it wants to go lower. We have this sharp, we have impulsive right here. This is corrective. Now remember, stocks will tend to alternate between impulsive and corrective moves until they reverse, and then you get impulsive moves in the opposite direction. So if you're in a downward trend, you'll get impulsive down, more choppy and corrective. That'll be the step. In the stair step, you usually get impulsive down after that. When it reverses, you'll get impulsive down, impulsive up, and then you'll get corrective as it starts to move back up. So that definitely looks kind of more choppy, more sideways, so I would assume that we're going to get another move down in bonds. Now, typically, again, not always, bonds will move opposite of the market. So could this mean there's maybe a little bit more of a chance market rallies then if bonds are going down, if the TLT goes down? Yeah, that's definitely possible. They don't always move in opposite directions though. That's something you could, if you're trying to find reasons to be bullish on the market, that might be a little bit of a reason to be a little bit more bullish on the market. But that's kind of acting like it wants to go lower. Gold. Gold's been an interesting chart. The very near term, it's acting like a downtrend. You have impulsive down. This is corrective, impulsive, a little bit of a step right here, impulsive down. Is this an impulsive move up, or is that a little bit corrective? Here it looked like a little bit of an impulsive move up, and it rolled over and went lower. I would say you've got to take out this high to turn more bullish on gold, because that's, you had lower highs, lower lows all the way down. I can't tell if that's a lower high yet. If it can break out and go to a higher high, then that would be acting more like an uptrend at that point. You could also draw a triangle formation off of the longer term chart of gold. You got kind of a descending triangle formation with these two lows right here. You can draw a trend line, horizontal trend line right there. Now that would probably, it wouldn't break that trend line for a while. And if you broke out above these highs right here, that would definitely, you'd break above those highs and you'd break that declining trend line right there. So gold's in a little bit of a no man's land right here. You could, if you were looking for a reason to get long gold, at the very least, wait for it to move above this high to at least show you some sign that it's breaking that near-term downtrend. But gold's been pretty hard to read now for a little while, and which is odd because we just keep getting new inflation numbers, and everyone knows that when the inflation goes up, the price of gold usually soars as a hedge against inflation, but we just haven't seen gold take off. And I'm not a commodities expert. There's people that trade gold and silver all day long that could give you reasons for maybe why that's the case right now, but I'm not seeing it on the chart yet, and until I do, I'm just assuming that it's kind of in that no man's land right now where it could go either way. Now, if it breaks this support down here, that would definitely be bearish for gold. So we're at a point where it's got to hold that support. If it breaks that'd be very bearish for gold if it breaks below there. Oil, that's been the talk of everything, is oil is really the main sector that's rallied. Well, oil and financials have really been doing well. But oil is just, every day it keeps going higher and higher. In the portfolio right now, we only have a couple of, I think we only one or two oil stocks, but they're the ones that are really holding the portfolio up right now. Can that continue? Well, it can, but, keep an eye on the slide bar up here. We're at the far right side of the extreme reversal risk. Oil's probably due at some point to have a little bit of a correction. If I were to try to identify how far I think it could pull back, here was the breakout area right here after that last correction. You might expect it to come back to the breakout areas. What used to be resistance is now support. But again, I don't see any sign of that. What would be something you could look at is a more immediate signal that maybe a correction is starting? Well, this is where you could look for it to close below the low of the previous day. It hasn't done that for a while. Even right in here, it never closed below. Well, here it did. Here it closed below the low of the previous day as it kind of started that correction. But I mean, this one closed below the low of the previous day, and that correction didn't last very long. Could it be that you get the same thing where it just barely pulls back and keeps going? Absolutely, that could happen. But the trend in oil is strong, but could be nearing kind of a top, at least a near-term top. Keep an eye out for that. So in other words, I wouldn't go rushing out and buying oil stocks right here. You're probably a little bit late, and you'll see me. I'm gonna take out a couple of stocks in the watch list that are oil stocks or energy stocks that I just missed the move. I mean, I was waiting for a little bit of confirmation, and it moved a little bit too far from where I didn't want to go chase it, and I'll wait for another opportunity if I get another opportunity. The dollar's been trending up. One thing to kind of point out here is I had this little pullback right here. It's gone a little bit higher today. So we've got kind of that stair step higher, and it still looks like it's in place. If it breaks below that low, that would be something to look for this week, because so far we've been getting higher highs and higher lows. If it breaks below that higher low, it would now have a lower low, and that could signal a potential trend reversal. But the current trend is up, and so we're going to assume it's going to go up and keep going up until it's showing us stronger clues that it isn't. The VIX, again, this is what has been worrying me. We had that sell-off yesterday, and the VIX barely moved up. In fact, the VIX is this is the VIX chart that you can trade. It's kind of the ETF that kind of tracks the VIX. It doesn't move in the exact same way as the VIX indicator itself, but it's one of the ways you could at least visually look at the VIX here on TradersPro. And just again, we're just not, just a lot of complacency there. All right, chip stocks. Now they didn't rally very much on Friday when we got that market rally. That was one of the things I looked at. There was no participation with the chip sector. In fact, the whole Nasdaq was still down and didn't really participate in that rally on Friday either. It is participating today. We did go to a slightly lower low right here from an intraday standpoint, so that's something to keep an eye on. This just looks, that's a pretty deep sell-off. I just wonder if that's going to hold. It could rally a little bit, but I'd want to see the rally. Is it more choppy? If it looks a little bit more choppy and back and forth, I'm going to assume that there's still more downside on the chip stocks. I don't see anything that would cause me to want to run out and buy chip stocks right here. You could say, well, Jerry, isn't this an ABC correction right here? Well, ABC corrections retrace part of the move. So if this is the move up, that final move up, it's retraced that entire move. That's not a bullish sign. That's a sign that you might be starting to roll over right here. It might start reaching. We've already gone to a lower low, so we've got, we've kind of broken that uptrend that was in before. So that does concern me a little bit. And that would wipe out, if you wanted to use the bond market as a reason to maybe be a little bit more bullish on the market, this would be a reason I'd be more bearish on the market. So I've kind of crossed out that. So you're getting conflicting signals. Go to Priceline and go find a nice vacation spot for the next few days. If you've been dying for vacation, this would be the time to take it right now. Transports. Here's a reason you can maybe be a little more bullish on the market, where the transports have put in a higher low right here after that sell-off. If that sell-off didn't go to a lower low, you'd look for it to see if it can go to a higher high right here. Because even when it tried to, here it attempted to rally right here, and that it did have a higher low right there, but it couldn't go to a higher high. That was the previous, you had lower highs, lower lows. It couldn't break above, go to a higher high right there. It rolled over, had another higher low right here, but had a lower high right here, and then it went to a lower low, still putting in lower highs. So if it could finally go to a higher high, that'd be a reason to be more bullish for the Dow, at least, because this is what we were comparing with the Dow Industrials, the transports and the Dow Industrials. But it's not giving any confirmation either way just yet. Bitcoin had a little bit of a pullback through here. It's been moving higher since then, but and one of the big discussions right now is Bitcoin the new gold trade? Meaning, is the reason why we're not seeing gold go up with all the inflation numbers we're seeing because people are not going to gold, they're going into Bitcoin? That could be a possibility. I don't see it. I don't see it being a major a major thing, a flight. I don't think it's. I can't wrap my head around it being the new safety trade just yet. Just because I just don't think that Bitcoin, the confidence level in Bitcoin, gold we know has always been valuable since the beginning of time. Gold has always been valuable. And that's why people have so much confidence in gold. Bitcoin just doesn't have that level of confidence. I can't see a multi-billionaire saying, I need a hedge against inflation. Let's go all in on Bitcoin instead of gold, when there's just too much uncertainty. They're not going to bet their future wealth or the possibility they could lose their wealth on Bitcoin being the number one hedge against inflation going forward. So could I see people diversifying into it, doing a little bit of gold and Bitcoin? Yeah, I could see that, but I don't see it as being the replacement for gold as a hedge against inflation just yet. At least I can't wrap my head around that. Maybe I'm just don't know about enough about Bitcoin. All right. As far as individual stocks here, I don't have too many. Under the transportation sector, we already have EDRY in our watch list. I'm going to add ESEA, Euroseas Limited, 98 strength rank. Let's put the signals on here. Hold on, my top pulls up. A little bit of a pullback. It's been trending higher. All these shipping companies have been trending higher, as with the whole supply chain issue. They're being able to charge more on these shipments, and that's not going to last forever. So you got to be a little bit cautious. And these are in uptrends, but those could change very quickly if because once those supply chain problems start to even out, those shipping prices are going to come way down, which means it's going to affect the earnings. They're earning a lot right now, but that's going to change. And remember, traders are always forward looking. So these stocks are going to start going back down or start to pull back. They're going to start pulling back before these companies start having to charge less for those shipping costs. So there's a lot of people that think those supply chain problems will start to even out or get back to normal. They're looking at probably Q2 of next year, so in the spring of next year, which probably means fall or winter, you'll start to see these stocks start to pull back, and maybe they have a little bit more of a run here until you get to November, December, January, or something like that. But there may not be as much upside to these going forward. But and that's kind of my opinion. But we'll it doesn't mean we can't trade it for a few weeks if the trend is still good. So let's throw this into our watch list. Go ahead and put an alert on it to notify me when it goes from hold to buy. And then under computer and technology, again, I'm going down the strength rank list a little bit. I'm down into about 94 right here, but this ASAN, a nice little uptrend here. It's pulled back. I don't know if I would have liked to see a little bit more choppiness to the pullback right there. But I mean, I'm not getting into it right now, so I can always just put it in the watch list. We'll keep an eye on it and see what it looks like. I'll go ahead and put an alert on it as well. And one more under computer and technology, this IRIX. And I really like this chart because again, I like charts when they've had a pullback and then they're looking like they're maybe turning the corner, starting to move back up. You've got this little impulsive move up. This looks corrective. You could wait for it to break out to a higher high right here. You've got the higher low. But this is one I think I want to keep an eye on. And also what I like about these when they pull back is you have a reference point. In fact, let's look at a little bit longer term chart on this. You got a reference point of where if it does start trending back up, where potentially it could get back to, and this could get back up to these levels up here. You can see it had a big run up right through here, this deeper pullback, and then now it's starting to show those signs of maybe going higher. So let's throw that one into the watch list. And I'll put the alert on it, but I'd probably want to wait for it to break to that higher high, break out of that range. So even if it goes to a buy signal, I might wait another day or two to see it break out first. All right. As far as portfolio management, we did get close to getting stopped out of a couple of trades yesterday. HOV, we'll look at the charts here in a second, but HOV, our stops at 92. GDYN was really close. It's trading at 28.51. Our stops at 28. Let's look at some of these. STKS, boy, this one's just it's just been moving sideways. Hopefully, it can start to take off here. I mean, at least it's acting like it's still acting like it wants to go higher. You got higher lows through here. It can break out of that little range. That'd be a good sign. It could work its way back up to this high up here, but it's gone back to a buy signal. It still looks pretty good. HOV, you can see we got really close. We had the intraday low that kind of almost dipped. Well, it didn't quite dip below those levels. Our stop is right below these levels here, but it still managed to close above there. The fact that it's holding this support area is a good sign, but that's why I have my stop there. If it breaks that, I definitely want to be out. That one's real close. GDYN, same thing. In fact, this is the one I think I was looking at where our stop is right below here. We did trade below that yesterday, but we didn't close below it, so we were right there. In fact, I was looking at it, trying to make a decision: do I just go ahead and stop out, or? But I wanted to wait until it closed below that level. It's rebounded a little bit today, but not a ton. We'll see. I'm still hoping this is, this is the correction and it'll start taking off again. But a lot of that's going to depend on what the market does. Now, SBOW has really done well. Again, this is one of the oil stocks, exploration stocks. We are at the far right side of this extreme reversal risk. So as many of you know, if you've been following these updates, what I like to do is change my or implement an exit strategy where if we close below the previous day, we'll get out and take our profits on this thing. So we do have a little bit of a bearish reversal candle today. That doesn't mean that it has to go down from here. But one of the things I don't want to do is give back a ton of the profits I've already made, and we're up on this position. So tomorrow I'll be watching this low right here tomorrow at the end of the market day. If it looks like we're going to close below that, then I'll go ahead and get out and take the profits that we've made in that move. Remember, you might say, well, this might not be done going up. Well, doesn't mean I can't get back in it. If it looks like it's going to continue to trend up, I can jump back in it again if I want. But when you're in that extreme reversal risk and you're at the far right side of that extreme reversal risk, the potential upside move is not as great as the downside risk. In other words, holding on for that extra dollar profit isn't worth the risk of this, because remember, stocks fall a lot faster than they rise. Isn't worth this thing dropping suddenly and dropping $3 suddenly or something like that. Again, you got to be careful about managing the greed. One thing I know is that when stocks close below the low of the previous day, that's one of the first solid signals of that a run could be done. Doesn't mean it is. Doesn't mean it always goes down after that. But that's a sign of weakness that I can use to take profits on positions I'm in, or even stop out of positions if I need to do that. So I'll keep an eye on that one tomorrow and see if we need to take profits on it. If it keeps going higher, let it keep going higher. Then if it goes right back up again tomorrow, we'll just wait until it closes below the low of the previous day. I might do the same thing here on ASPN. Again, we're at the far right side. Now that's a bearish reversal candle. We were all the way up here earlier today, and then we come all the way back down, and we're about to close lower than where we opened. But I'll still wait to see if we close below today's low tomorrow. Now, sometimes, by the way, I'll just, could I go ahead and just get out just on that bearish reversal candle? Yeah, you can, but again, sometimes your exit decisions could be too quick. Now, if I was really confident the market was going to drop, and I saw a nice strong bearish reversal candle, I might go ahead and do that. But like I said, I haven't been able to determine where the near-term movement of the market's going to be, or is likely to be, and so I think I'll wait for that a little bit extra confirmation to see if it closes below the low of the previous day. And this is our hedge. This is the inverse ETF for the S&P 500, and you can see it's gone up as the market has gone down. With the market up today, it looks like it could be closing below the low of the previous day. I'm going to wait till the market closes, but I might go ahead and exit that if that happens. That was my strategy, was as long as the market keeps dropping, I'll stay in this. But as soon as it can close, if it can close below the low of the previous day, I'm going to go ahead and get out. Now, again, if the market does have another sell-off tomorrow, that may hurt that trade. But that was my plan, so I can always get back in it too. So, but that was my plan, so I'm going to go ahead and do that right at the market close. But I want to make sure it's going to close below that, so I'll be watching that going into the market close. As far as watch list, I do want to boot out a couple of stocks in the watch list. Let's go through some of these real quick. Our watch list is getting pretty big anyway, and we don't want to get too big. I can put the signals on for this. I'll keep holding KRUS because it still looks like it could be that descending triangle formation. I'll keep holding SCOC for now. KOPN. Some of these aren't looking great, but TGLS is okay. KDNY. Oh, TGI was one that I could possibly enter. It has gone back to a buy signal. Again, this could be an inverse head and shoulders pattern, but I don't like the candle today. It's a bearish looking candle. And we've got a lot of resistance right here. I think I'm going to wait to see if this thing can break out, because there's still a lot of upside if it can break out, and I'd be a lot more confident. This is the one when I started the class, I was kind of, I might add this one, I might not. I'm kind of back and forth on that. I'm trying to add these in class as much as I can, but I don't want to. I don't want to get into bad trades just because I want to get into them, or have bad entries into trades just because I want to do it in class. So I think I'm going to wait for that little bit of extra confirmation. Maybe on Thursday's class, we'll get that, and I can do it in class. But I'm going to wait on that one. GameStop, I'll still kind of watch that one. Now CEIX, this is one I missed. It took off, broke out. It's on the far right side. I'm going to go ahead and boot this out of the watch list just because. It could give us another entry. It could pull back and give us another entry, but then it'll show up on our scan, so I can find it later on. But I'm going to go ahead and take that one out. DAC had a big drop. This is one of the shipping companies had a big drop yesterday, and I was actually thinking about just booting that one out. But when I look at the chart, I mean, here you have this big run up. That looks like wave A, wave B, wave C. Had this big run up. Could that be wave A? Could that be wave A, wave B, and this is wave C? You're still kind of along that trend line of that trend right there. You can see this a little bit better if we back out to a one-year chart. It's still kind of holding that trend line right there. Now, if it breaks that, then I'll definitely be out. But I thought I'd leave it in there for a little bit longer to see if it can hold that area. EDRY is another shipping company. Looks okay still. IKNX went to a buy signal today, but again, I just don't want to buy anything in these conditions. Danger is this could be like CEIX, or what if it really starts taking off and I missed it? That could be the risk there, but I just don't want to get into anything new today. Alcoa still looks okay. MGNI, I'm gonna boot this one out because I was really kind of hoping this would be kind of an inverse head and shoulders pattern, but this drop right here is a little bit too deep. Yeah, I'm just not really liking that one anymore, so I'm gonna boot that one out. And then ALTM, I missed this one too. There's another oil stock. So I'm going to go ahead and take that one out too. SENS, I'll keep that one for now. Tesla, I want to get back into Tesla, but I had a little bit of a bearish reversal candle yesterday, and today it looks a little bit weaker today as well. That one might be one I get into tomorrow if it looks like it's starting to go up again. ORMP, just waiting for that to go back to a buy. See if that could go back to a buy signal there. ESCA, we just added that one. ASN, we just added that one. IRIX, we just added that one. So those are staying. All right, so let me go back to the list here and boot out CEIX, MGNI, and ALTM. All right, that's it. Saved a little bit of time for you. I wish it was a little bit more of an exciting update, but maybe Thursday will be a little bit better. We'll have a little bit of a clearer idea of where things are headed. If not, then it's really going to be frustrating because usually these, like I said, this doesn't happen very often, where I can't get an idea of where things are more likely to go. I can't tell exactly where things are going. I'm not trying to but as far as the probabilities, it's one of those where it could go either way. All right, thanks everyone. Have a good week. We'll see you on Thursday for the stock specific class. Bye now.